Real estate investing is the best for 3 reasons. Rental property investing is the preferred investment strategy for investors who want an additional source of monthly income along with steady appreciation in the value of their portfolio. But while investing in residential or commercial properties can bring extra income each month, it also comes with risk. Real estate investments, like all investments, don't always pay off. Sometimes the real estate you invest in loses value over time. Real estate investing has some advantages comparing to other investment opportunities. It is a proven way to build passive income and equity from appreciation and the most powerful way to accumulate wealth. More people have become millionaires through real estate than any other means. Real estate investing is the best for the 3 following reasons. Passive income. When you invest in real estate, you are really buying an income stream. For example, rental property can provide a steady stream of cash flow, a way to make money when you're asleep, on vacation, or after you've retired. It is important to find a way to divorce your time from your income, at least part of your income, since you cannot spend time on all of them. Diversification. Don't put all of your eggs in one basket. A key part of any investment strategy is to be diversified. Diversification helps to protect your portfolio from ups and downs in the stock market and world economies. How much of your portfolio should be made up of real estate? There are different opinions about that, but a good rule is 5%. In crisis periods that percentage can be much higher, like 3 or 4 times higher. Real estate is a physical asset. Some types of real estate investments offer a hedge against inflation because it is a physical asset that can be monetized via rent. Real estate can provide stability during market dips. You have 4 options for investing your real estate money. There are much more options for real estate investing in our days than ever before, thanks in part to the internet. Either online or other ways, these are the best real estate investments options for 2022. Rental property. Rental property is a form of passive income. In particular, turnkey rental property. Turnkey is defined as built, supplied, or installed complete and ready to operate. It can apply to real estate properties that are sold ready to rent or with tenants already in place, so that the investor, often buying long distance, earns rental income from day one. You'll have a property management team handling the daily operations, making it a hands-off, passive investment. Turnkey rental property is a great investment and it has some unique advantages. Location. Online platforms allow investors to buy properties in lower cost of living areas. Hands-off. Obviously, if you live thousands of miles from your rental property, you're not going to be the one taking care of the day-to-day running of the property. And even if your rental property is near your home, you may simply not want to be involved apart from earning the rental income. Turnkey rental property companies often provide A to Z service, everything from finding the right property to collecting rent to maintenance to evictions. Buying a rental property isn't affordable to everyone. Ideally, you'll need at least a 25% down payment, but some marketplaces have homes for sale in the low to mid 5 figures. For example, you could find a €36,000 home, so a 25% down payment would be just €9,000. What is the average rate of return on rental property investments? There are too many individual factors involved. How much did you pay for your rental property, how much are you getting in rent, etc. Jason and Danae own 2 rental properties, one purchased through Rightmove. Here are the total income as of late 2021. Cash flow, after mortgage and management fees, €24,257. €808.50 per month. Appreciation €91,982. Equity built €8,846. Unplanned expenses €11,002. Home sharing site, Airbnb. Home sharing is a global trend that is growing. Travelers looking for an alternative to traditional hotels connect with a booking website in order to reserve short-term rentals from a host. You do not have to own a second home or even have a spare bedroom to rent out in order to make money with Airbnb. One alternative method is known as master leasing. Master leasing means renting and furnishing an apartment and renting it out on Airbnb. You will need to pay the rent on the apartment. Ideally, you are getting enough bookings to cover the rent and make a profit, but there is a risk of not having enough bookings to cover the rent. A third way to make money with Airbnb is to manage properties for owners who wish to rent their properties out via the site. Managing properties doesn't cost you anything. Whatever expenses you incur should be factored into what you're charging the owner for your services. What is the average rate of return on home sharing site Airbnb investments? Airbnb is one of the best money makers in the so-called gig economy. Airbnb hosts make, on average, about €925 a month, according to a recent research. Of course, the income can vary dramatically depending on where you're based, how frequently you rent out your place, the quality of your home and the services you provide. Maria said that she was making twice the market rate for rent on the property. She master leased it and estimated that it's possible to make €500 to €1,000 a month managing properties. When you have the right automation in place, you'll only need to spend 8 to 10 hours a week actively working. REITs and mutual funds. Real estate investment trusts, or REITs, can be fantastic ways to add both growth and income to your overall portfolio, while adding diversification at the same time. REITs are companies that own, operate, or manage real estate assets including residential real estate like apartment buildings and commercial real estate like malls or office buildings. Some REITs simply buy properties and rent them to tenants, others develop properties from the ground up, and some don't even own properties at all, choosing to focus on the mortgage and financial side of real estate. Some REIT mutual funds have no minimum to invest. Before you get started, it's important to familiarize yourself with the basics. What is the average rate of return on REITs and mutual funds investments? As measured by REIT Index, the annual return on US REITs is about 13%. Compare that to the S&P 500 index, a broad measure of performance for the US stock market averages a return of roughly 10%. Multifamily home. If you really want to buy a home but don't have a large enough down payment or would really like to own some rental property but worry that you won't be able to make 2 mortgage payments, buying a multifamily home could be just the answer. Multifamily property, also commonly known as apartment complex, is a buildings with more than one rentable space. There are more barriers to entry when building a portfolio of large residential complex, but there are several advantages to owning multifamily real estate. These include access to easier and better financing opportunities, the ability to quickly grow one's rental property portfolio, and the luxury of hiring a property manager. You can live in one unit and rent out the others. Living in a building and renting out the other unit is eligible for primary residence financing, which requires a lower down payment, and the mortgage has a lower interest rate than loans for investment properties have. You are required to live in the building though for a certain number of years, but typically it's just 1 or 2. Cost depends on the cost of the unit, but for a 2-unit building, you just need to make a 15% down payment. For 3 or 4 units, the minimum is 20%. Ideally, your renters are paying your entire mortgage and enough to generate some profit on top of that. What is the average rate of return on multifamily home investments? The data found on the rate of return for multifamily home investments is good, but it makes no distinction between owner-occupied and off-site owners. Between 1992 and 2017, the multifamily asset class has generated an average annual return of 9.75%, which is a higher average annual return than any other type of commercial real estate. Should you invest in real estate? The bottom line. Much like stocks, Real estate investing allows for one to be successful through several different strategies. One of the most popular ways to invest in real estate is to own a collection of rental investments. Having some real estate in your portfolio is a wise investment decision, and because there are so many ways, many of them easy and inexpensive, there is something for everyone. But don't get too excited. Remember the rule: 5% of your portfolio should be real estate. You can bump that up by 4 or even 5 times when things are uncertain. Thank you for watching the video. If you watch all my lectures, you may be able to start investing in rental properties a little quicker. Please subscribe to my channel and press the bell to get alerts when a new video is posted. Please write your comments, questions, or concerns you would like to share.